Hi everybody, it's Greg here. It is April 14th, 2020, and I'm coming at you with another video. And this time I'm going to talk to you about the economy and the stock market as it relates to the lockdown. Okay? I'm in the car, as you can see. I just came out of my office. Spent a few hours in the office trying to get some things done because I'm going absolutely crazy and insane vis-a-vis staying at home, not digging that. And so let's take a drive, shall we? All right. So, we're continuing this lockdown thing. As of yesterday, the president and, at least what I saw, a bunch of northeastern governors were discussing plans for lifting the lockdown and trying to get things reasonably back to normal. Who knows if it is premature or not? Only time will tell. But I just wanted to talk about the economy as it relates to the market, the stock market, a little bit. The stock market has been recovering over the last week or so, largely based on two things, in my view. One is an unprecedented and some might even argue reckless intervention of the Fed in an attempt to stabilize markets. They've basically printed billions and trillions of dollars of money and started purchasing all kinds of securities, treasury bonds, mortgage-backed securities. And as of last week, they started buying high-yield debt or junk bonds in an effort to address some of the dislocations and widening spreads that you've seen in the corporate market. While a lot of this was probably warranted, the effect on the dollar and the effect on, potential inflation is anybody's guess. I mean, it's almost impossible to predict these things now because, with the advent of, since 2008, the intervention of the government has been so intense and so pervasive that all of the rules and things that I learned on Wall Street on how money supply works and money flows and inflation and all that, you can throw all of it out the window because none of the rules apply anymore because the government basically controls everything. Government turns on and off the economy. The government turns on and off the spigot. The government, as you know, 2 weeks ago sent out or passed a $2 trillion bailout package, which they're now saying is not enough. I mean, this just unprecedented level of government intervention, while in the short term it seems to be helping things. Certainly the stock market loves it. We will yet to see the long-term effect of printing endless amounts of money and endless amount of fiscal stimulus, which, by the way, is all deficit spending, right? Because we started all this with a deficit of about $1 trillion. So now we're borrowing $2 trillion on top of it, and it's all borrowed money. None of this is not like money that's sitting in an account somewhere. This is all borrowed money. And the money that the Fed is injecting into the financial system is they're just printing money. They're printing dollars. They're adding dollars to the money supply. And I don't see how that doesn't just completely trash and devalue the dollar over time. I mean, it has to. Mathematically, it has to. It's just really very, I guess I'd say perplexing. And again, on a short-term basis, some of these things, were probably needed. But it's the long-term effect that I'm concerned about. Now, short-term, again, stock market loves it. Okay, the stock market, they're hearing that the governors are talking about, ending some of these lockdown provisions and getting the economy back working and getting people back to work. Stock market loves to hear that because it looks like the end's in sight on this whole pandemic thing. But I think it's that good news combined with the insane amount of money that the Fed has pumped into the system is just making the stock market go up just by, gravity, just, pumping in so many dollars. It's got to go somewhere, so it's going into the stock market. It's going out of the bond market and into the stock market. But, I think where the rubber's going to really meet the road is the first quarter reports, which are starting to come out now from companies. But I think where the real damage is going to be seen is in the second quarter, where we're probably already in a recession. Well, probably. We are already in a recession, self-inflicted by the government. And the question is, if unemployment gets to 30%, we'll be in a depression, okay, as classically defined, right? So that is going to absolutely crush corporate earnings. And, guys in the stock market, they're pretty smart. I think they realize this. But when the reports actually come in and they are much, much worse than the market is currently discounting, right? Because the market is a discounting mechanism. It's not reflecting what's happening today. It's reflecting the expectation of the future. When those reports come in drastically worse than people currently expect, I think the market's going to be in trouble again. I mean, could be wrong. It's hard to predict these things with all the, fiscal and monetary intervention. But my guess is the market's not going to just go straight up from here. Okay. The other thing I'm thinking about today is the effect, the short-term and long-term effect on commercial real estate. As you may or may not know, I've been involved in real estate for over 20 years, both as a financier and an owner and operator. And I think commercial real estate, and particularly certain asset classes like retail, is going to get completely crushed. I've heard from many of my clients that tenants are not paying despite the PPP program, where the government sent out a bunch of money to supposedly cover rent and other operating expenses like salaries. It's been slow to take up. A lot of tenants didn't pay in April, and so we're waiting to see what happens in May. I think the rubber's really going to meet the road in May. A lot of tenants are just not going to pay. In jurisdictions like New York, the governments have really, really irresponsibly given tenants, particularly multifamily tenants, the impression that they don't have to pay their rent because of the shutdown. And I heard anecdotally from one of my clients that's a big multifamily owner in New York that his collections on his apartments were 25% in April. Okay, so what do you think they're going to be in May? And this is because, and this was his opinion, and I believe it too, the government is basically implicitly giving tenants permission to just not pay their rent. Okay? Which is a horrible overstep by government, and it goes along with all of the other examples of property taking that these liberal, largely Democratic administrations in New York, California, all over the Northeast, but particularly New York, which I'm following very closely, between the rent control regulation, which doesn't allow people to raise rents anymore. They eliminated vacancy decontrol, which means that you could, when somebody moved out of a stabilized apartment, you could renovate that apartment and, along a formula, raise the rents to the point where eventually you got it to free market level. That's gone, completely gone. So now landlords have no incentive to invest in their buildings anymore. And then they got the 1-2 punch right after that, 6 months or so ago, after that example of property taking, illegal property taking by the government got passed. Then they got the 1-2 punch with the pandemic shutdown. So now they're, multifamily as an asset class, and I've said this quite a bit recently, has gone from the perception of being the least risky asset class to now the most risky asset class, because there's, unquantifiable political risk attached to multifamily now, because the governments hate landlords, love tenants, and landlords have no rights. They're systematically taking away property rights from landlords and giving all the rights to tenants, and there's no incentive to own property anymore. So, I don't know what's going to happen. I've said to a couple of my friends in the New York real estate business, what were you guys doing when when the New York legislature and the city council basically steamrolled over all of your interest and basically took the value of your property away? Where were you guys? What treehouse were you sleeping in while all this was being done to you? And maybe the real estate lobby deserves it, because they were asleep at the switch. And it's an unprecedented, terrible situation. And, that combined with the economic impact of this COVID virus thing, second quarter 2020 is going to be ugly beyond comprehension. And I don't care how much money the government throws at it. Okay? So it's not a completely dire assessment, because I think that, third quarter, after things begin to get back to normal, after we go through the summer and things get back to normal, and hopefully this virus thing doesn't come back again, I think the market will be higher, and I think, real estate will stabilize, commercial real estate. But I'll tell you, getting from here to there, it's going to be rough, guys. Don't think that, the government tomorrow is going to open up the economy again and everything's going to be fine. No, it doesn't work that way. A lot of these small businesses, they're going out and they're not coming back. And that is absolutely catastrophic for retail real estate, I believe. These shopping centers, open-air shopping centers, they're going away and they're not coming back. there's going to be a complete revaluing of those assets, accompanied with permanent changes in buying patterns. Okay? That's another thing that's happened here. I myself, I bought more things on Amazon during the last month than I have in my entire life. Okay? And it's working out pretty good. I bought a high-def television the other day, a top-of-the-line high-def television. I did all the research online. I had some brand loyalty towards Sony, so I was sort of leaning towards Sony, but I checked out all the other brands, all the other, comparables. I bought a 55-inch 4K ultra high definition television on Amazon. I got it in a day on Amazon Prime, free shipping. Let me tell you something. I'm never going into a store again to buy a TV. What I used to do is I used to go into a store and check out every TV and look at all the pictures and, blah, blah, blah. I don't need to do that anymore, and I won't be doing that anymore. So what is Best Buy's loss is Amazon's win, and it's just going to get better and better and better for online internet marketing, e-commerce, which is why I have an interest in it. And it's just going to get worse and worse and worse for brick and mortar stores and brick and mortar retail. All right, so anyway, I'm at my destination now, so that's my thoughts for today. Hope you guys found it interesting. If you have any questions, I threw out some terms that you might not be familiar with, Wall Street terms, financial terms, economic terms. Put the comments, ask your questions. I'll try to answer every question. And if you like this post, hit the like button, please. And also subscribe. I got a lot of content coming out. Business, investment, and real estate, all in the digital age. And so a lot of interesting stuff coming out. So subscribe so you can be up on everything I'm putting out. Okay? So take care, guys. Best of luck to you. Let's keep our fingers crossed on this economy.